Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Robert Korn. Robert is the President with Carlyle Aviation Partners, and he's joining us for the purposes of our 2024 Aviation Leaders Report. I should say we're recording this in New York in October. Robert, thanks again for joining us. Before we get into the meat of the conversation, do you want to tell our watchers, most of whom will know a lot, right? But Carlyle Aviation Partners' place in the aviation finance world.
All right, great, thanks everybody. Carlyle Aviation is now today in our 22nd year. We were founded just in 2002 by myself and the partner Bill Hoffman. Today, having sold the firm to the Carlyle Group in 2017, we are now just about 400 airplanes, a small 20 aircraft A320neo order. We have an aviation lending business that finances pre-delivery deposits, and roughly $11 billion of assets under management. Our primary offices are in Miami and Dublin. We're building a nice size office in Singapore as well today, and we're about 130 employees globally.
Super, Robert. And maybe if we level set at the start, we've clearly seen a really strong travel bounce back, and would you mind talking us through how you've seen customer performance evolve over the last 12 months and where you're seeing opportunities in the market with new customers?
Well, the airlines have certainly rebounded. What many of them face is that they didn't get government support during COVID, so they're carrying quite a bit of debt on their balance sheets or arrears with lessors and other suppliers that they need to find a way to refinance or restructure their balance sheets. Those airlines are generating cash today, but certainly not enough from an operating standpoint to repay those amounts over the next 2 or 3 years. So that's a headwind that those customers are facing. We have plenty of travel demand. Another headwind that they're facing is the ability to get aircraft back in the air quickly in an environment where there's limited MRO capacity. Right? We're still seeing, in bits and pieces, we're seeing the Chinese market open. It's opening slowly. It's absolutely doing fantastic domestically, where the Chinese have focused on domestic consumption first, and they're slowly opening up visas to Southeast Asia, and then we believe to Europe, and then to the US ultimately.
And then if you think about that type of market, as you are looking to engage with new customers, or where the opportunities are for Carlyle, is it geographic focused? Is it more airline relationship driven? Can you talk to us when you're sizing up opportunities, what's driving those opportunities?
So, if I contrast ourselves with a balance sheet lessor, a balance sheet lessor does their concentrations based on the size of their balance sheet, and they may concentrate on different aircraft types, different airlines, geography. We do all those same things on a fund-by-fund basis. So we're raising today our 6th fund, SASOF 6 fund. That fund, similar to SASOF 5 and SASOF 4, will have its own concentrations based on the size of that portfolio. So we're similar in a sense to all the others, and we focus these funds on newer technology and current technology aircraft. And based on, as these funds have progressed, a higher allocation has gone to new technology aircraft. We try to be geographically dispersed inside each of these funds, but we're an opportunistic buyer. So we do look, we have been historically a large partner of the biggest lessors, buying blocks of aircraft from them as they keep overturning their portfolio just to keep their age constraints. And why is that important to them? Is because they're trying to continue to remain investment grade and operate in an unsecured market. For us, it's a little bit different because we're not out looking for a rating. We're raising debt on a portfolio and pool by pool basis within these funds. So age is less important, as is the portfolio itself.
Yeah, and does that feed in then, Robert, to the trading environment? As you say, if you're back to the order book maybe in a moment, but predominantly maybe operating the secondary space, do you think we have a functioning trading environment at the moment? You mentioned kind of the supply side challenges. How are those things marrying?
Well, we do have a functioning trade market, but it's certainly operating in a smaller scale than pre-COVID. So I go back to those large aircraft lessors. one of their other notions to maintain their credit ratings is size, growing versus shrinking. So if they're shrinking, it makes it harder to maintain ratings. So if they're not taking enough deliveries, they won't be selling down as much because they're going to try to maintain their mass. At the same time, as the deliveries start to ramp up, the asset sales will start to ramp up. And so these things are both happening, and in a sense, the market is starting to function, but it's starting to function on a smaller scale. We are seeing a lot of aircraft be shown in the marketplace now. We're not necessarily seeing a lot of them trade. I think the perspective on price, on the ask and the bid, is not necessarily converging in all cases. There's a lot of testing going on, which I view as healthy. What's made up for that, in our case and a few others, is acquisitions of other platforms, right? So during COVID, we purchased both Fly Leasing and then subsequently AMCK. So whereas the trade sale market was somewhat shut, we were able to acquire two different lessors during COVID, and we had previously bought the AirGen assets. So we've actually been a 3-time M&A acquirer over the last years, and others have made some large acquisitions, like SMBC purchasing GoShock in the last year. So I do think that has helped overcome the limitations in the marketplace for ourselves and SMBC, and Avilease has recently acquired the Standard Charter platform. So I do think that that's been part of what's balanced out the market.
And I might come back to that consolidation point in a second, but if we hone in, maybe you mentioned Deliveries and the larger IG rated lessors. It's a small pool of lessors with order books, but it is important, as you say, to that trading environment that they are getting the assets that they have ordered in the time they've ordered them. You mentioned the order book. I think it was via MCK you might have picked up that order book. Your thoughts around whether the OEMs can deliver on what they're saying they're going to deliver, given the challenges they've had so far?
It's a great question, and I think things are getting better for the OEMs. I think there's still struggles on the engine side. I think the OEM airframe suppliers are getting better. It's an area I'm quite familiar with because Carlyle has so many aerospace companies that the Carlyle Group owns and participates in, as well as in manufacturing. And where all of these issues start is at the labor level. It's simply a lack of skilled and available labor trained and prepared to manage this ramp up. So when you think about lack of components, it's lack of labor at the sub-tiers building those components. It's lack of raw materials and just moving stuff through the market, increasing the flow. It can only increase so quickly. So this is really an underpinned logistics issue of getting a machine that was well oiled pre-COVID, that we then broke it, retired many people. People went outside the industry never to come back, and now we're trying to put this machine back together and have operated at a speed that is faster than it's ever been before. And I think it's an impossible task that we're looking for, and in some respects I think the OEMs have set themselves up with an impossible task that, in fairness to them, I think is just an enormous task in a open, easy environment, which we're not in.
And you mentioned engines, obviously the well-publicized issues we're seeing for Pratt & Whitney. As a lessor, what are your perspectives on that? Because obviously that is going to constrain supply. So, if you've got a large balance sheet with lots of aircraft, in theory, that's going to be helpful from a lease rate factor perspective, but have other negative connotations. So as a large asset manager, how do you view those engine challenges impacting on your business?
I think it's enormous. And it's enormous because, we're making investments in A320neos. We have a GTF order. We're very concerned about values today, marketability today, marketability in the future. Right? How does it affect our decision to move forward with those engines? At the same time, we've had more Pratt & Whitney engines over the years than probably any other type. If you start at the beginning, and then with JTADs, and then subsequently we've rolled into quite a few CFMs, and they've become our dominant engine operator today. We're We're worried about how that impacts our customers that have to take engines off wing and send to the shops, how that impacts their financials and their ability to operate, right? We're fortunate that each of our largest operators of GTFs, it is a small portion of their fleet that is impacted by the existing situations, and we hope therefore it won't have a massive effect on that individual airline.
And maybe feeding into your perspectives on values then, we're talking here about a lot of supply side challenges which would really, the implication of which is asset values should go up. Is that what you're seeing in the market?
Yes, in many respects. So if you're on the spot market, an aircraft on the ground today, values have certainly gone up, right? There's no doubt about that. Whether it's gone up 1% or 20%, that's neither a buyer nor a seller is found to answer that question. But there's definitely upward pressures on price. Lease rates, there's upward pressure on price because it's a supply-demand situation. If you're selling today an aircraft with a 5 or 6 year lease remaining, you've got contracted cash flow you're buying plus a residual that I think most parties think will be normalized in the next 5 or 6 years. So it shouldn't have a significant effect on the value of the asset. If you're selling an aircraft that has a 1 year remaining lease, it could certainly have an effect on it.
Yeah, so those lease encumbered assets, as you say, a bit more static because of what they're linked to.
Yeah. This all ties into the fact that the OEMs, to both of them, so it's a mutual congratulation, have such a demand for their aircraft and such limited supply that each one of them has a very strong position when they're negotiating price with the next customers, and it all flows down.
And maybe moving on to the financing environment, we had this discussion a year ago, rates were ticking upwards and we knew they were going to tick upwards. I think the pace and rate, the pace and speed of those changes have probably caught people a little bit by surprise. Can you talk to us about what this heightened interest rate environment impact is having on Carlyle?
Well, certainly it impacts us because rates are higher and we have existing portfolios that need to be refinanced. So certainly we all, as history knows, we talked about this last year. We talked about rates were rising. We expected them to go very close, if not to this point. Nobody expected it to happen so quickly. And that's really what caught everybody by surprise. History has shown buying aircraft in a high rate environment and then as rates normalize, refinancing, relevering, or selling should lead to a good outcome for investors. So we do view this as a good time to acquire aircraft, and we will do so.
And when then you're looking at your financing options, what's your perspectives on the health of the aviation finance market when we take across, maybe we've got bank lending, alternative lending, structured product, as you are assessing your avenues for financing, where are you seeing the most opportunity now with the best rates for Carlyle?
Well, so since we last talked, we've done unsecureds in Fly, we've done ABS, we've done term loans. I think today, while looking for the best rate, we're also looking for liquidity. And I think there's liquidity in all of the pockets, but there may not be enough liquidity in any one pocket to finance the businesses, right? So we've pivoted from a point where we did ABS after ABS from 2014 to 2021, and it was the go-to, and very successful, fantastic job by our team, with the investors, with our bank group. And subsequent to that, we've had to become more creative and more open. We've benefited from the fact that we were a strong brand, strong manager, strong backing from Carlyle, and so we've been able to find financing for all of our portfolio. I think other lessors that are smaller and less branded are probably struggling. I think the bigger ones are doing just as good or better than us. I wouldn't want to perhaps be a first-time issuer in a market like this. Right? I wouldn't want to be a small lessor in a market like this.
And do you think, that maybe honing in on ABS for a moment, as you say, you guys are a prolific issuer regularly in that market. We're probably, as I mentioned, we're in October now, we're starting to see noise around the market again, probably the first positive noise we've heard in a while. Your perspectives on where you think that ABS market could return to in the near term?
Well, that's a great question. I don't, I won't predict the future. We are very, very active in speaking to all of the big and medium-sized ABS investors. ABS East is coming up next week in Miami, and our team has over 30 meetings scheduled to meet with institutional investors. We are on regular phone calls. We have a whole team just dedicated to servicing our investors. So we want to be very mindful of and provide them continuing opportunities. But those opportunities have to be able to be placed in the marketplace at a competitive point where it's equally or more attractive than bank debts, or close to, so that we know what we're doing. I go back to the point that we need to finance our entire business. I just don't have a date or a time when we'll get to that crossover point. But it's certainly an area we're actively engaged in, and if the market itself wants to be constructive at the right price, or there's a private ABS opportunity, we've done 2 of those where we did private placements of an ABS structure. We're a willing financier, willing participant.
And probably a trend line we've seen over the last couple of years has been the rise of the alternative lenders, a lot of which are private equity backed. You mentioned at the start you guys have been on the kind of PDP kind of financing piece. Can I get your perspectives on the alternative lenders? Is it a market that you think you guys will tap, and do you think it is one that is going to stick around?
Well, so to answer your question, we have tapped it, and I think we've tapped it, if I'm not mistaken, with 3 different alternative lenders, who all of them have been great counterparties, and we had done business with all 3 of them when they were working at banks. And so you're seeing similar lending teams being hired by private equity capital providers and providing a similar type of service. Some of them providing even more flexible structures, right? So I think that's an area of the environment that will continue to stay. And I think it's very healthy, and we are very interested in working with those parties. In terms of our product offerings, we have one product we offer today, which is pre-delivery financing to the airlines. It's been very well received, and we've been blessed to work with both big OEMs, and they've both been equally a pleasure to work with. And we're excited to forward think about what other products we can offer to the airline customers in the future. This will become, over the next couple years, something you'll see us, and I will probably play a leading role on the Carlyle side of asking our team, how can we grow the business? What businesses do we currently have that should get bigger? What new businesses, and when I say new business, I mean we're lending in this area, we could lend in the next area, versus we have this many new orders we could add to that. I'm not saying we are. But we want to focus on how do we take this business. In the last 22 years, Bill and I have taken it from 0 to 11 billion. So what's next, and how fast can we drive it to the next mile marker? That's our goal.
And maybe putting a lens then of ESG into financing, curious as to the various avenues and debt capital that you're accessing. Does ESG come up in any of those conversations?
Well, it's interesting. What does come up is some lenders have set targets to finance, more and more and more of the NEO type, environmentally more friendly equipment. So there's certainly there's certainly some lenders that are very focused on that's what they want to finance. So if you want to have more accessibility to finance, you're going to focus your efforts on those new aircraft. We have to all step back and remember, it's not like 5-year-old Maxes and 5-year-old NGs are going to disappear tomorrow. First of all, even if we took them all out of service, there's not enough Maxes and Neos to support the entire environment. So for us to think as an industry that we can prematurely retire all these current, the classics, the NGs and the CEOs, is completely it's unreasonable. So, but we do see that there's a strong push from some of the banks to encourage us, or to give us a benefit to buy and finance new technology aircraft, certainly.
And maybe moving on to the investor side, as an asset manager, having raised a number of funds, you have great perspectives on the nature of investors that are attracted to aviation finance. Have you seen any interesting trends develop on the investor side, maybe post-COVID, or is it still similar types of investors, albeit that the names of those might change?
Similar types. I mean, the majority of the capital comes from the same places that the largest pools of capital in the world reside, be it pension funds, sovereign wealth funds, endowments. Those are the largest places you're going to find money. And if you think about a third, which is an asset manager, they're getting their money ultimately from those places. The names do change. Each individual fund goes through transformations where they change how they deploy their capital and what routes they ultimately get to, right? But when you then go and ultimately take apart their portfolio and think about where is their underlying invested capital ultimately going and how is it spread, it's usually generally pretty similar, right? I'll give a lot of credit to my partner Bill Hoffman and to the Boeing Capital people like Tim Myers that spent a lot of time working to develop new investors in Asia. And they spent a lot of time together with Bill and with Tim and his team, meeting with Japanese investors over the last 10 years, really building out interest and doing seminars in Japan. Bill himself and our team have traveled all around the world, starting even our first funds in 2010, where we struggled to raise $100 million, to 10 years later, where we had repeat investors who've invested well over $1 billion with us on the private equity side, and the list has gotten longer and longer and longer. And then you look at early on, along with Castlelake, we were the only two fund style investors raising money from pension funds and endowments for funds, to where there's a lot of participants today that have raised funds in aviation to invest in aircraft and aircraft engines. You can even then take it to another step and look at and compliment Donald Slattery for, well, whereas he went with a bank the first time around, the second time around when Donald started Avalon, it was private equity sponsored. He was able to raise capital from the private equity markets. He did a fantastic job. And I think private equity and private capital have become a much larger and bigger influence in our ecosystem, in our industry.
And obviously, in dealing with those types of investors, you're fighting against other asset classes. When you're kind of extolling the virtues of aircraft as an investable asset, what are you saying to investors?
Well, I think what you're telling them is, first of all, you hit the high level. It's portable real estate. It can be moved where the opportunity is, right? But it's a long-dated asset. It's an asset that has a very, very long product life cycle and is going to last and be operated for 20 to 25 years, if not longer. It's predictable. There's large barriers to entry. So it's not like the computers where in 3 years you're going to be, there's a whole new product life cycle and a change in manufacturers. It's not like shipping where 60 or 70 different yards can make a boat. So there's a lot of attributes of owning an aircraft. There's a lot of attributes of investing in one where you can feel confident that you have a steady, constant stream of revenue and you have predictable asset values. There's very little change. You can predict the supply and demand, at least the supply side of this, very well over the next 5 years, because there's only two guys that can only ramp up production so much. And if you look at demand over the last 20 years, it's pretty predictable how it's changed. So I do think it's a very good industry to invest in. I do think we have to address the headwinds of all these multiple, what we'd like to call black swans, but we seem to have swans every 6 months.
Yeah. Grey swans. And can I ask you then, maybe we mentioned some of the M&A and consolidation that we've seen over the last couple of years, and there's been a bit of a theme, right? If you take AMCK or you take Goshawk or you take Standard Charter, they're in that kind of 100 to 150 aircraft brackets. So, going back 7-8 years ago, pretty big, substantial lessors. You guys acquired some, we've had a new entrant acquire some, we've had a large player acquire them. Is scale become more important, and as such, do you think as an asset manager or a balance sheet lessor, you really need to be hitting, whether it's $7-8 billion or more, to be relevant and make the returns that are needed?
we keep avoiding the elephant in the room that keeps buying big ones, right?
Yeah, well, that's true. This is true, right?
I do think scale matters quite a bit. I think it's very important today, more so than before. I do think there's a much larger concentration of aircraft with the top 10 lessors than there used to be. Even though you eliminate one and you have 2, 3, 4 platforms come out of the remnants of strong, really quality management people that have elected not to join the merged companies, those parties are generally starting small platforms, and there's only the few that are going to find any bit of scale. And they're going to be great people, and they'll do a few deals, and they may trade, but as they start to get to scale, they end up getting consumed anyway. So I think we only have to look to the top 5 or 10 lessors and see the significant quantity of aircraft they control. And I think that's where the business is going to ultimately end up, is the haves are going to get more, and the have-nots are going to get less.
And maybe, again, focusing on big picture leasing, we've seen, the percentage of leased aircraft on a long-term trends one way, and at times it spikes and flattens, and times it spikes and flattens, and we probably saw an uptick over 50% post-COVID, and lessors were probably funding mid-50s of new deliveries over the last couple of years. We mentioned airlines are now generating a lot of cash in this environment. Do you think we'll see a tapering off of that percentage of leased assets, or do you think the relationships that lessors have built with airlines and the resilience they've helped show over the last few years mean we'll continue to see an uptick in that percentage?
It's a great question. There's reasons that it'll go up and reasons it'll go down, and I think the jury's still out. Why will it go up is, I think, a significant portion of the growth we're going to see over the next 10, 20 years is going to come from the LCCs. I talked a lot about this earlier today in the main session of the conference here in New York about how spending time in Asia and in India, you start to appreciate the growth of population, the growth and the maturity of the middle class, and the number of new airports that are being constructed. Whereas on our side of the world, we're in a mature environment where we have our connectivity. We have so many more airplanes per person than the other side of the world does. That's where the growth is going to come, and that's where the large, successful LCCs like Indigo, Vietjet, AirAsia Group, Lion Group, that's where they play. And they're going to continue to grow and grow and grow. And so those parties typically operate in an asset-light environment. It's healthy for them. That's their choice. So that's a strong reason why I think you'll see a preponderance of leasing coming in. At the same time, we have very large state airlines looking to place large orders that have lots of capital, both on the airline's balance sheet and outside the airline's balance sheets, like the Saudi-based airlines, like the Gulf-based airlines. They have a lot of capital, and they've often chose to own their own airplanes, and that may drive airline ownership.
And Robert, maybe just in closing then, as we sit here in October, and what are your optimism levels like as you look out over maybe the next 12 months for Carlyle and the wider sector?
Well, I mean, clearly, other than Carlyle, everybody's going to do poor. We're going to do great, right? That's maybe we should stop and start that one over.
Well, I hit that one. Go.
Couldn't help myself.
Robert, great insights as always. Can I ask you in closing, as we sit here in October and you look out over the next 12 months, what are your optimism levels like?
Cautious. So we have, as an industry, huge tailwinds in revenue generation. We've got a great situation for lessors where there's limited new deliveries, but there's significant demand. So the demand and supply equation should favor pricing for us, which should help us be able to remarket at a much higher level. We are still managing and getting caught up with the increases in inflation and interest rates, which I think we have to get our hands around and make sure that we have properly managed on our balance sheets and our forward-looking balance sheets. But there's a lot of headwinds that we have to address, such as the geopolitical risks that are very worrying. We have to deal with the fact that the airlines, many of them, still have not restructured their balance sheets post-COVID, even though they're starting to do very well, they can't simply recover all of those problems through their operating cash flow over the next couple of years. So I think it'll be interesting to see where the next 12 months takes us. One thing I'll say is we have an enormous amount of airlines run by really, really smart people. And they've survived COVID. And we have a very, very solid institutional group of backers of smart, big lessors. Right? And I think those two things I could never have said it in such a convicted manner over the last 20 years. I mean, this business of airlines and leasing companies has matured, and we've all been through an amazing last couple of years, and those that have survived and grown should be stronger.
Robert, excellent insights as always. On behalf of KPMG and Airline Economics, I'd like to thank you for your time today and wish you and Carlyle a very successful 2024.
Thank you very much, Joe. Thank you, everybody.